where to invest. When one decides to invest, the goal in mind is to make investments in a way that it gives high returns quickly as possible, without the risk of losing a lot of money. And to achieve this goal, many investors look out for top investment plans that helps them to make their money double in a little period of a few months or years with little or no risk factor involved. But this high return and low risk combination may not exist in an investment product. If we look at reality, risk and returns are related to each other. How? It's common that the higher returns the investment offers, the higher it also has. It's very important to look at the risk that particular investment associates and your risk profile before selecting any investment avenue. There are many investments a person can make. Some of them do carry high risk, but in return, they have enough potential to generate higher inflation-adjusted returns more than any other asset class. If we see on the long term, and some investments come with low risk, but again they have lower returns as well. There are two main kinds of investments named as financial and non-financial assets. In financial assets there comes market-linked products such as stocks, mutual fund. Fixed income products include public provident fund, bank fixed deposits. Non-financial assets, physical gold, real estate. Why should you consider investing? People consider investing as it can be another source of income and meet the daily living expenses and make things easy generally. Investing can be source of income, can help fund your retirement, can even get you out of a financial burden in the future. And most importantly, investing is something that helps you grow your wealth, as if you have good purchasing power you can meet your financial goals. And it's simple. For suppose you have sold your home and come into some money, then if you invest that money wisely on investment, it's pretty wise decision as it will grow over time. Nobody has any idea about sudden market volatility. Having this overall, you still have many ways to invest. You can make a combination of investments to create a diversified portfolio to meet the risk involved. Here are some investment options. 1. The stock market. If we take a look at common investment options, no doubt the stock market is a beneficial place for any investor to put their money in. How does it work? When you purchase a stock, you then become an owner of a small portion of that particular company you purchased into. Now, whenever the company profits, you may get a payment of a portion from the profits that company makes in dividends, and it's based on how many shares of stock you own in that company. With the growth of the value of the company over time, the price of the shares you own growth as well, and you can also sell them for a profit. 2. Investment bonds. Investment in bonds work as when you buy a bond. That means you are loaning the money. You can loan it to either a company or government. Now that company or the government that is selling you the bond will pay you interest. Then it is on the loan and is throughout the bond's life cycle. Bonds are generally considered to have less risk involved as compared to stocks, but as risk is low, the potential they have for high returns is much low too. 3. Mutual funds. If you decided to invest in the stock, would you pick each stock by yourself, independently, and how many purchases and effort it would take? Well, no worries, mutual funds offer a deal purchase. These stocks in mutual funds are then actively managed and chosen by the mutual fund manager. Downside. Mutual fund managers charge a fee when you invest in their mutual fund. This fee may make it difficult for investors to reach their goal of beating the market after an investment in mutual funds. Most of the mutual fund investors don't ever beat the stock market actually. 4. Savings accounts. Saving accounts is considered the least risky way, but its downside is it's the least profitable way too. In saving accounts option, you invest your money in a way that you put it in a savings account and let it collect interest. Following the statement higher risk, higher returns, the savings account has low risk means low returns too. 5. Physical commodities. It's another common investment many investors consider. These are the investments you physically own. Physical commodities include gold, silver. 6. Rental housing. Rental housing is another great investment if you too are willing to manage your properties. You'll need to select the right property, finance or buy it, maintain it, and finally deal with tenants. Downside. You may overpay for housing. There's lack of liquidity issue. Conclusion. Investing can result in making you wealthier over time, and investors do have investment options. If it's of safer investment, it may offer lower returns, and of riskier may have higher return. Investing can be done even with a little amount of money and is always better to consider to upgrade your life. That's all for today. Where will you invest? Share it in the comment section. Please like and subscribe for more videos.